Well, we'll try to speak about Eicher Motors. They've come out with their Q3 FY22 numbers, and well, the consolidated revenue has come in lower than what we had anticipated. It's up just 2% year on year, with revenue coming in at 2881 crore versus 2828 crore in the year ago period. When we look at profit too, that's also coming lower, over 14.5% lower. In fact, it's coming at 456 crore versus 532 crore in the Q3 of FY21, similar quarter of last year. And EBITDA has also come in 13% lower, and the margins have come in 3% plus lower. So when we look at margins for Q3 FY21, they were at 23.7% versus the current margin at 20.2%. So there's been a bit of a margin decline as well. But of course, it's an inflationary environment, so that is a bit understandable as well. Let's break it down. Well, commercial vehicle volume has gone from 12,805 to 16,000 vehicles. So that means that there has been an acceleration on the commercial vehicle side, 25% year-on-year growth in unit sales. Well, revenue too has gone up 35%. So they've been able to pass on some of those costs. But EBITDA has still come in lower, 6.7% versus 8.4%, which was the margin in Q3 FY21. PAT has gone higher though, so that's coming with a nice bounce. 57 CR was where the PAT was last year. Currently, it's at 66 crore, which is the commercial vehicle business. And these numbers were purely on the commercial vehicle side of things. Moving on to Royal Enfield, well, in terms of unit sales, they've come down. It's come down from nearly that 2 lakh mark to 1,67,000 mark broadly. And that the management says is largely due to the semiconductor and chip shortage crisis. Also, the other thing that impacted sales was the COVID second wave. And both those reasons are quite understandable. Now what the management is saying is that the company is trying to create an alternative vendor system to mitigate chip shortages. So definitely on the supply side of things will get better. On the demand side, what they are saying is that Royal Enfield is confident of its performance across geographies. So US, Europe are doing well, which is of course good commentary for the mid-segment bike company at the moment. And they're optimistic that global supply chains will also ease out. So again, going back to that chip shortage situation, that ought to get better. So on both those fronts, things are expected to improve. So growth momentum with regard to what the management feels going forward is going to be stable. The Classic 350, which is the new bike launched this quarter, has done quite well. And the company also has strong plans on the apparel and accessories business, which also looks quite lucrative at the outset for the company. So multiple growth drivers driving this particular stock. Positive management commentary and a just below inline set of numbers. So broadly, that's how Eicher Motors stacks up.